The tables have turned. Okay, maybe not officially, it's not a buyer's market, but there are a lot of things you can take advantage of as a buyer right now. So I'm going to share that with you in today's video, but also it's finally happening, cooler inflation. Let's talk about what happened last week. So this article says it's finally happening. Cooler inflation opens the door to rate cut. As I said last week in my video, the CPI was coming out last week, and we were curious to see how that would come out and how that would affect markets. And the good news is it came out lower than expectations. So last week, the CPI revealed inflation had cooled at a more accelerated pace than expected in June, providing a pathway for the Federal Reserve to lower interest rates. I've talked about this every week, but the Fed has talked about a potential rate cut in September, but a lot of that is really dependent on this data, making sure that inflation is trending in the right direction, and we're seeing more of a trend of that versus just 1 month of a lower reading. And so this was good news for that effort. The news sent yields on the 10-year Treasury. This is typically the leading indicator for mortgage rates, tumbling as soon as the inflation data was released on Tuesday. So what happened with mortgage rates? You guessed it, they went down last week. Nothing significant, but it did go down. So that was good news. So check with your lender if you have not already. The CPI rose 3% in June on an annual basis. And like I said, that was cooler than investors expected. Jay Parsons is a real estate economist, and he's been following this for years. He said it's finally happening. And he's talking about the fact that for over a year, he's noted that falling rents showed that national inflation would plummet. So what's important about this is that the price of shelter makes up about a third of the weight of inflation. And so he's been looking at rental rates to understand how that will eventually impact the CPI and impact inflation. When the price of rent and other goods spiked during COVID, inflation also spiked, but research has shown that there's a long lag time for inflation data to reflect a drop in rent. So the spike in rent helped keep inflation high. So even though we're seeing these things in the market, it's not reflecting in the data yet because there is a long lag. So he's been saying for a while we would start to see this trend downward, and it has taken some time to get here. So what happened with rates? Well, according to Yahoo Finance, they're saying the rate fell to 6.89% from 6.95%. Like I said, not a huge movement, but considering we've been around 7% most of this year, at least we are ticking down a little bit. So if you are out there buying and you've been working with a lender, maybe check in with them if you haven't heard from them, especially if you're close to writing a contract, because you may be seeing a little bit of an ease in your mortgage payment with the rates today. According to Mortgage News Daily, mortgage rates dropped sharply after inflation data. Rates were prepared to make a big move in one direction or the other as we anticipated that CPI. And fortunately, it came in quite a bit lower than expected. Rates went below 7%. It's the second largest single day drop so far this year. The improvement also adds to the case that rates are in a downward trend after the last major peak in April. So I think, it's great news that we've seen mortgage rates come down, but more so, this is just reinforcing the trend and the fact that the Fed is really going to consider that rate cut in September. So we will see what happens from here, but that is the latest on rates. So what I was saying earlier, that the tables have turned, I think if you're a buyer, you have a small opportunity at the moment. If rates move down just a little bit further, right now the market is kind of soft. It's not a buyer's market, but like I said, I'm going to show you some data that shows that you have some negotiating power out there right now. And so if you can find a window of time where you can capture a lower rate or one that is at least a little bit more palatable, and also have the negotiating power, you could be in a good situation if you're ready to buy at that time. Now, I don't know if this is going to stay this way. However, if we do start to see rates come down, if inflation trends in this direction, if the Fed says they will cut rates, and we start to see mortgage rates come down, then I think a lot of buyers who are on the fence may jump back in. You'll have more competition. Things will heat up. Now, again, no one can predict anything, but at this point, there might be a slight, small little window to jump in where you have an advantage and rates have softened a little bit. But no one can anticipate what's actually going to happen. That's just what I'm seeing on my side. So home sale prices hit record high for the 9th straight week, but rising supply and slow demand could dampen further price growth. So this is from Redfin. It's looking on a national scale, but I do like to share this because it's showing national trends. The median sale price hit an all-time high of $397,000 during the 4 weeks ending July 7th. That's up 4.7% year over year. And we're seeing a similar trend in Phoenix with higher home prices year over year. Sales prices have remained stubbornly high despite elevated mortgage rates pushing down home buying demand. Pending home sales are down 3.5% year over year. And mortgage purchase applications are down 13%. So it's kind of a weird market where we're seeing slower sales, lower number of sales, but we are seeing prices higher year over year. Yet at the same time, we're seeing just a lot of indications of a softer market, like price cuts and seller concessions and all of those kinds of things. Yet we continue to see price growth. And so I think that this price growth will start to slow down and stop eventually as prices kind of catch up to what's going on in the underlying parts of this market, meaning those list price cuts that are taking place and the negotiation power that buyers have. Eventually, I think we'll start to see some softer prices based on that. There are signs that price growth may lose momentum soon. The typical home is selling for 0.4% less than its asking price, marking the first time the typical home has sold under list price at the start of July since 2020. Additionally, just 32% of homes are selling above asking price, down from 36% a year ago. Again, the lowest share at this time of year since 2020. Now, we still have historically low inventory, they're saying. New listings, however, are up 7.3% year over year. The total number of homes for sale is up 18.3%, with most homes for sale growing stale. More than 60% of homes are listed for at least a month without going under contract. So similar things that I'm going to show you that and what's going on here in Phoenix. But as I mentioned last week, our listings are up about 57% year over year. And I mentioned last week, well, that sounds scary. You have to remember we're coming from a very low level of inventory. So anything above that is going to be a large percentage, although 57% is a large number. And for a buyer, it gives you a lot more choices. So there is some good news in all of this, especially on the buy side. So overall, what we're seeing across the country is some of these softening trends, and we're going to break down what's going on in Phoenix. If any of this is helpful to you, by the way, make sure you hit that like button. Maybe consider subscribing so you can be here with me every Tuesday, and share it with someone who would find it helpful. So what's going on in Phoenix? Active listings here. Let's take a look at what we have here. So this purple line is where we're at this year, 16,000. Last week was a holiday coming off of the 4th of July. So we had a little bit of a dip there, but we're back up. Now this seems to have leveled off a little bit. I don't know that we're going to see supply continue to rise. I could be wrong. It's held kind of steady, but right now it seems like it's leveling off. If we compare to 2023, that's the pink line. So you can see where that gap is, that 57% change year over year. Obviously, because when we got into 2023, all we did was lose supply throughout the year until the very end of the year. And in this year, we've had a completely different trend. We've just continued to increase and stayed somewhat flat and elevated. So that's where we're seeing a big gap in terms of active listings. But good news for you, if you're a buyer, you have more choices. If you're a seller, you have more competition. That means you have to have a great product, right? You have to have a very desirable house that's priced right, that's clean, that smells great, and is in a great location. All of those things will help you sell faster because Buyers have a lot of choices. And I mentioned this before, but this is what I'm seeing a lot on my listings is buyers are seeing homes multiple times and they are taking into consideration every single detail. And if it's not the right property for them, they're not even writing a low offer. What they're doing is saying, I'll find something that I actually like, and they just don't come back to it. So that is the market that we're in right now with, if you're a seller, you may be experiencing something like that. Our median days on market right now is 34. Now, this is across the valley, so every zip code is a little bit different. And this means the number of days on market before a contract is accepted. This is not list date to close date. So as a seller, you can expect to be on the market about 34 days before you get a contract. 50% of homes are selling before 34 days and 50% of homes are selling after 34 days. So this is the median. Now, this has been rising. You can see over the last few weeks, couple months. I mean, if we look since the beginning of the year, really the trend has only gone up. This is Christmas time, which is typical to see a spike there. But this is where we stand today. We'll see if that continues to go up. It may not. If mortgage rates really do start to make moves downward, we may see the days on market come down. And I've talked a lot on this video so far about advantages for buyers because rates are coming down. But sellers, that's good news for you too, because that means more buyer activity. So that's why I'm saying, buyers, if you do have a window of time where you can jump in, where sellers are on the market competing with against other sellers and maybe more negotiable for one reason or another, but you also are getting a slight dip in rates, you could be in a winning situation there. But waiting too long, if rates really do come down, then you will likely have some more buyer competition out there, and sellers get less negotiable. Speaking of negotiable, concessions, 51.7% of sales had seller concessions in the last 30 days. I think this is the last 30 days, but I could be wrong. So I'm going to redact that. But lately, let's say, 51 or almost 52% of sales had seller concessions. The median amount was $9,300. Seller concessions means that a seller contributed some amount of their proceeds to the buyer to apply towards their closing costs or a rate buy down or something like that. This is often what we're seeing in negotiations before we actually see prices come down. So buyers are negotiating in these concessions. Sellers are willing to do that rather than a price reduction. And so sometimes as we see these sales prices remaining high, as I said earlier, we've seen year over year increases. Those sales prices are not taking into account any seller concessions. And at the end of the day, the seller concessions is less net in the pocket of the seller. It's less money for their sale, and therefore should be taken into consideration as an overall softening in the market, right? So that affects what a seller is able to sell for. Now, let's also look at price changes. So like I said, we're seeing a lot of seller concessions. We'll see that before we see actual prices coming down and price changes. These are the price cuts. So last week, there were 2,436 listings that took a price cut. This has kind of been volatile, a little bit up and down. You can't really see a particular trend with price cuts. But what I will say is it's on the map, right? Like we used to be much lower in terms of our price cuts. Go back to 2021, 2022, price cuts were like almost non-existent. So we're definitely on the map consistently, in this area here around anywhere between like 1,500 to 2,500 price cuts a week, which is more than what we had seen previously. And this is 2022 when mortgage rates went up and buyers disappeared. And then a lot of sellers actually took their homes off the market. But anyway, point being, we're seeing a consistent amount of price changes a week. So again, as a buyer, what are you seeing out there? You're seeing more listings on the market. You're seeing longer days on market. You are seeing 52% of homes giving concessions to the buyer, and you're seeing a good consistent number of price cuts per week. So you have those things to negotiate. Maybe looking for a home that's been listed on the market more than 34 days. So they're over that median amount, they may become more negotiable. And then you can negotiate on some of these things aside from price, maybe ask for some seller concessions because sellers are more willing to do that before they're reducing their prices. So I would be looking for all of that. And by the way, if you want a list of homes that have been listed for more than the median days on market, check the description below. I have a link where you can find that list of homes there. Sales price. Annual median sales price today is sitting at $440,000. Now, keep in mind, these numbers look a little bit different if we're looking at like price per square foot and how that has changed if it's being measured on an annual basis or a monthly basis. But today what we're looking at is the annual median sales price. So like I said, $440,000 today. Last year at this time, this was the pink line, we were at $430,000, and 2022 splits us right in the middle there at $435,000. So prices have varied a little bit. We went down last year and we've come back up this year. So not too much difference from where we were at a year ago and 2 years ago, but you can see the path to get there has been a little bit of a journey. In 2022, prices continued to go up, even though we had all those changes with rates. That ended up coming through in prices. You could see that reflected in 2023 when prices started to go down as we looked at the annual median sales price, at least. And then beginning 2024, we had some strength in prices, and it right now seems to be kind of at a plateau. We'll see where that goes as we move forward throughout this year. But that's what you can expect with prices. We're not seeing huge gains, even though we are seeing some price appreciation. So let's look at the CMI. Every week we take a look at this. This is from the Cromford Report. They provide such amazing data for us subscribers to use. And the Cromford Market Index is considered in balance if it's anywhere between 90 to 110, a balanced market. So at 101.3, we are in a balanced market according to the Cromford Report. So like I said, not a buyer's market yet, but there are some advantages that you have as a buyer right now as we're looking at what's going on in the market. Our demand is about 25% below normal, and our supply is about 26% below normal-ish, right? So we're very, very close with supply and demand being even, which is what is keeping us in this balanced market. Looking at every major city throughout the valley, at least the ones that the Cromford Market or the Cromford Report can collect a CMI for, we have many red arrows, and all of those red arrows mean that that city lost ground for sellers. It moved away from a seller's market and closer to a buyer's market. Now, when I say that, you look at Chandler, 181 is still very, very far from a buyer's market. They're in a strong seller's market still. But they lost 10% month over month. Last month, they were at 203 as their CMI reading. So it has softened in Chandler, along with all of these other cities with a red arrow. Overall, the average change month over month for all of these cities was negative 7.2%. That's a larger fall than last week. We were reading at negative 6.9%. However, it is a slower rate of decline than we've been seeing week after week. So all of that to say, this might be starting to plateau a little bit, this kind of fall in the CMI that we're seeing for all of these cities. So we'll keep an eye on it. And especially if we start to see more buyers out there with lower rates, then that will start to, stop this from falling and keep it stable or maybe bump it up a little bit. We have 9 out of 17 cities that are sellers markets, meaning that they are over 110. 2 cities are in balanced markets, and the remaining 6 are buyers markets. What the Cromford Report is saying about this, not much has changed since last week. And although the market is close to balance, there is currently little sign that it will deteriorate to the point where the buyers have the market overall. So their anticipation is that we were not going to get into a buyer's market officially. Overall supply looks like it's leveling off, bringing an end to the upward trend that has been in place since the beginning of the year. Without excess inventory, any improvement in demand caused by falling interest rates could translate to the CMI changing direction. However, this is currently just a possibility and yet to be proven. We will certainly be reporting on it should we find any solid evidence. So that's just their forecast based on what they can see right now, but not very certain on where we're heading. So take that as you will. Here is the contract ratio heat map. So this is looking at the number of homes that are on the market available for sale versus the number that are already under contract. And it's a heat map. So it's looking at, various zip codes. The green and blue colors are cooler markets. It's cold, balanced markets. Anything yellow is hot and anything red is hotter or potential frenzy. And it appears that we are seeing a little bit more green and blue in the market this week than we were last week. I don't think we had as many blue in the Phoenix area. Tolleson is still hot. And then we also have Phoenix 85053 pretty hot as well. And North or 85284 in Tempe. A few other zip codes in the East Valley are warm, some North Phoenix as well. But overall, everything is kind of that blue and green, indicating that we're in this balanced or cold market. So hopefully that's helpful to you if you are a buyer out there or a seller to understand those market conditions and really what's going on in your zip code. So if you're a buyer out there, make sure you check in with your lender, first of all, and keep in mind all that data that I shared about what's going on in the market where you may have some negotiating power. Check the description for a list of homes that have been listed over the median days on market. And homeowners, if you are considering selling your home and getting into the market currently, check the description below because I have a link to an instant home value just to give you an indication of what your home may be worth. Thanks for joining me this week, you guys. Any questions, drop them in the comments, and I'll see you guys next Tuesday for my next market update.